Hello friends, we'll be understanding another illustration based on the same subject, that is memorandum joint venture account and when the co-ventures recorded their own transaction. So let's figure out the illustration. So now that we are already aware about what kind of problem we have and how the memorandum and joint venture account is supposed to be prepared, let's figure out one more illustration on the same basis and understand how exactly I was supposed to solve this kind of illustration. So let me write down this illustration for you. So the illustration has been mentioned here. Let's read it out for you. The parties to this joint venture are Manik and Nari. They decided to work together in a partnership joint venture. The following scheme was agreed and the profit and loss sharing ratio was as follows. Manik will take the 3/4 share and Nari will take the 1/4 share here. They guaranteed a subscription of 10 lakh shares of rupees 10 each at par to Sheila Limited. And they also agreed to pay up for the allotment consideration, or rather the expenses for allotment here. Now, in consideration to this, that means in favor of this, Sheila Limited was supposed to give out 50,000 shares of his company apart from the other 10 lakh shares that are being issued to the public. The share value of those 50,000 shares was 10 each. Now, Manik introduced certain cash into the business to meet the following expenses like stamp charge of 48,500, advertising of 28,500, printing prospectus of 23,000. Similar to that, Nari also introduced certain cash to meet the following expenses: rent of 37,000, solicitor charge of 13,000. Now, applications fell short by 30,000. That means To apply for 10 lakh shares, 9 lakh 70,000 shares were only applied and 30,000 fell short. So Nari introduced further cash for those 30,000 shares, and this was utilized to subscribe for those 30,000 shares. Now once this deal was done, that means all the shares were subscribed, Sheila Limited further gave out 50,000 shares to both Manik and Nari. Once this was fulfilled, then Sheila Limited, as discussed, they gave out 50,000 shares to Manik and Nari. And they sold all of it. That means Manik and Nari, who received those 50,000 shares, they sold all of it. So in total they sold out 80,000, because 30,000 what they additionally subscribed for, and the other 50,000 that they got. So total 80,000 was sold out of which 20,000 proceeds, or rather the sale proceed of 20,000 shares was received to Nari, which amounted to 1,80,000. And Manik received the balance 60,000 sale proceed, which amounted to 5 lakh rupees. Now we have to pass the necessary journal entries, or rather we have to pass the necessary ledger accounts in both the books. That means memorandum account is supposed to be prepared, joint venture with Nari and joint venture with Manik is supposed to be prepared here. So let's make that. So in this illustration we are supposed to make the first memorandum account. So let's make the memorandum account now. So when it comes to memorandum account, we'll record all the expenses on the debit side and sales and closing stock on the credit side. So let's expense, or rather let's mention the expense done by Manik first. So the expenses done by Manik have been mentioned down here. Stamp duty amounting to 48,500, advertisement amounting to 28,500, printing amounting to 23,000, and the total 1 lakh has been mentioned in the outer column. Now the next thing that we'll record here is the expenses of Nari account. So in the debit side, we have also mentioned the solicitor charge and the rent charges that were paid off by Nari. Now all the expenses have been recorded that was done by Manik and Nari here. Now the next expense that we have to record is Nari subscribing those additional 30,000 shares at rupees 10 each. So that is also an expense here. So we have to note that down. So the subscription entry has been also mentioned, which is mentioned on the debit side amounting to 3 lakhs. So let's go on to the credit side now and mention down the sale transactions. So the first transaction that we have mentioned is by Manik, proceeds of 60,000 shares being sold out at 5 lakh. The amount has been mentioned. Let's mention Nari's transaction here. So the same has been also mentioned for Nari, that is amounting to 1,80,000. Now that we have figured all the transactions, let's see whether we have a profit or loss here. So now we'll be figuring out the profit in this scenario. Let's do the interim total first. So now if you can see, the interim total has been done. The credit side shows 6,80,000 and on the debit side it shows 4,50,000. So now that we know that there is a profit here, let's figure out how much is the profit first of all. So the total profit here is 2,30,000, that will be divided between Manik and Nari in the ratio of 3/4 and 1/4. So out of that 2,30,000, if 3/4 is taken, that means 1,72,500 is the share of Manik and the balance will be the share of Nari here. So with this, we have completed the joint venture account, or rather the memorandum joint venture account. We'll reiterate the details for you again. On the debit side, we have mentioned all the expenses done by Manik first. Stamp duty, advertisement and printing being one of it. Again, we have mentioned the expenses related to Nari, that is rent and solicitor charge. We have also mentioned the expense done by Nari in terms of subscription of those additional 30,000 shares at rupees 10 each, which amounts to rupees 3 lakh. Now, on the credit side, we have mentioned the sale proceeds. For Manik, it is sale proceed of 60,000 shares, which was sold out at 5 lakh rupees. And for Nari, it is the sale proceed of 20,000 shares, which was sold out at 1,80,000. So accordingly, we figured out there is a profit here for 2,30,000, and similarly, that profit has been divided between Manik and Nari in the ratio of 3:4 and 1:4. So 3:4 goes to Manik, 1:4 goes to Nari. Now, whatever profit we have earned here will be then further moved to their individual joint venture with co-venture account, or rather we can say venture with Nari account, venture with Manik account will have all these details. So the next step that we'll be preparing is the venture account of all these two people. So let's start with that now. Now in the books of Manik, we'll be preparing joint venture with Nari account. That is the first thing that we'll be preparing. So let's start with that. Now the first thing that we're mentioning here, that is in the books of Manik Nari account, that means joint venture with Nari. So all the expenses that are done here in terms of Manik will be mentioned down here. So let's write it down first. So the first entry that we have passed here is to bank account, because this is the expense done by Manik itself. Hence we cannot put his name here. So this entry has been passed with all the three expenses, that is advertisement, printing and the stamp duty charge has been mentioned. The total of this will be 1 lakh rupees. Now on the credit side, we'll be mentioning the sale proceed of his. So we've mentioned the sales as well. The next part is the profit account. That means profit will be recorded on the debit side. Hence we'll be mentioning the profit share of Manik itself. So now that we have prepared this Manik's account with the joint venture in Nari account, so we'll be figuring the balancing figure here. Now we know that the credit side is more as compared to the debit side, because you can already see in the numbers. So let's figure out how much is the balancing figure. So the value that we have figured out, that is the balancing figure, is 2,27,500. Now with this, we close in the books of Manik joint venture with Nari account. Now the next thing is that in the books of Nari, we'll prepare joint venture with Manik account with similar kind of entries. So let's prepare that now. Now that we are mentioning in the books of Nari, we'll record all the transactions done by Nari here. First, the expenses that Nari did. The second expense that we have mentioned apart from this, that means rent and solicitor charge, is one expense. The next one is the subscription of unapplied shares. That will be also mentioned here. Now the next part will be the sale part, that is supposed to be mentioned on the credit side. Once the sale proceeds are done, will mention the profit part, that is 1/4 share of Nari. That will be on the debit side here. So now that we have mentioned all the transactions, let's figure out the total of the debit side and credit side. By clearly we can see that the total of debit side is more as compared to the credit side, hence the settlement amount will be on the credit side here. So the total of debit side is 407,500, out of which 1,80,000 will be subtracted. So the balancing figure is 2,27,500, which is similar to the balancing figure what we got in Manik's account. So this balancing figure is only reversed here. In Manik's account, we found it on the debit side. In Nari's account, we found it on the credit side. So this is what happens, or rather this is what happens when it comes to settlement of final payment. So we'll reiterate the expenses for you first of all. The first expense that we have mentioned is the rent and the solicitor part. That is the initial expense that Nari did. Apart from that, there was certain unapplied subscription for which Nari attained, or rather he got out certain cash for himself. That is 30,000 shares into 10 rupees, that is 3 lakh rupees was utilized for this unapplied shares, post which he got the other 50,000 shares as agreed. On the credit side, we have mentioned the sale proceeds here. And this refers to sale of 20,000 shares. 1,80,000 was the amount that they received here. Now the profit part, that is 1/4 share, has been also mentioned here. That amounts to 57,500. Now when this happens, the balancing figure that has been found out is the same balancing figure that will happen in the account of Nari as well. So balancing figures should be the same. If you find there is any change in the balancing figure, that means the illustration is wrong, or probably you have done something wrong in that illustration. So this is what happens when we need to prepare a memorandum account with the joint ventures of both those accounts, or rather both those partners or both those co-ventures in each other's book. This is how the transaction refers to, and this is how, when every co-venture records their own transaction, you have to deal with such transactions like this. So I hope this illustration was clear enough to give you more idea about what kind of transactions you have to prepare when it comes to memorandum account, what kind of transactions you have to prepare when it comes to, in the books of some other co-venture account, you have to prepare the joint venture with other co-venture account as well. So these are the transactions, these are the journal entries you have to prepare. Make sure you are quick with the journal entries, because that's what will be very important when you are able to solve these questions orally. So when you are able to solve these questions orally, that's only possible when you have the idea about journal entries. Now there are 3 sets of journal entries that we have already learned. First, when it comes to no separate set of books, or rather separate set of books are maintained. When the second case is when separate set of books are maintained, but every co-venturer keeps a record of every other co-venture as well. And the third is when no separate set of books are maintained, but the only co-venturer keeps records of its own transactions. So the first one being separate set of books maintained, that is completely different. Now when it comes to second phase, that is no separate set of books are maintained, in that co-ventures either keep a record of all the transactions, or co-ventures keep a record of their own transactions. So this is what joint venture is all about. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.